Hi there, I can see a few people have joined us, so just bear with us while we wait for other people to join. 11 o'clock to tick over, and we'll wait a little bit longer after that to kick off the presentation. Going, so I don't want, I think we're all getting a little bit webinar weary over the last 4 months, so I'm going to kick this off. So my name's Guy Callahan. I am the CEO of Banjo. Very lucky today, sort of going through this webinar with a couple of people here who are going to take it over, and I'm just going to do the introductions to it. Andrew Colliver, our CRO and Commercial Director, will be sort of going through a bit of an introduction on cash conversion cycle and some different levers that we use. And then we're going to go into a product demonstration by AJ Singh, who is going to give you a bit of a demonstration on technology, because Andrew's sort of going to touch on technology. The reason we're doing this webinar today is cash conversion cycle is really important for SMEs, and no other time in our recent history that we know of has been more important than now, keeping on top of it. Banjo recently took on using Easy Collect's solution to help us look through our debtors and creditors to sort of get a bit more of an assessment when we're looking at loan applications. We found this tool really useful. So we thought it's worthwhile introducing it to as many people as we can out there, some of our clients. We can have a look at how useful this tool is and whether it'll actually benefit their business, which we think it will. So I'm just going to kick off the preso, and then I'm going to hand over to Andrew, who will go through the some cash conversion cycle issues, and then we'll go through to AJ. Any questions, please? There's a chat there. We're happy to take questions. I'll either sort of answer them throughout or save them up towards the end, depending on time, and we can start going through some questions there. And I'll try and cover off as many as we can as questions come through, and address people's needs. All right. So flicking into it. So who are Banjo? I mean, you all know who Banjo are. We try really hard to work with our clients, our SME clients, to help power the next chapter of their growth as a business. How do we do this? There's 3 pillars that we focus on. Smart solutions. We think the technology we use is really is great. It's cutting edge, and it really helps us and our clients. Here we are touching on technology again today. Smart partnerships. That includes the brokers, the accountants, the clients, the systems that we integrate with. We take a lot of pride in who we partner with throughout our organisation. And smart responsibility. We've got some really smart people with some good systems in here, and we don't want to do anything but lend responsibly to our clients. We will never lend to a client where we think it's going to put them under any more financial duress. All right, that's me for the intro. Now I'm going to flick over to Andrew Colliver. So I'm going to change the presentation, and he will start presenting now. Let's see, this is the first time on this system, so bear with us while it clicks over. No. Got it, Andrew?
Yeah, I'm just waiting for it to...
We can see your screen now. You're on the cover page.
Okay.
There we go.
Okay, thanks Guy for the introduction, and thank you to all the SMEs that have dialed in for this webinar. I know your time poor. I mean, really, not all of the SMEs on this call sometimes have access to, good quality information, from in the network, and this is really designed to help you. Just really wanted to quickly show this slide that really depicts pre-COVID to the left here. This is consumer discretionary spending, the crisis, and then you could sort of see the downturn, stimulus packages kicking in from the government, and then what we've really seen over the subsequent months is actually an uptick in consumer discretionary spending. And so really what we're trying to say is that even though there's a bit of doom and gloom around and things are certainly tough, there certainly are opportunities out there. And really, when you look at some of these industries that have been affected, well, pubs and clubs and travel, gyms, fitness, education, of course, but a lot of industries here still in very much positive spending patterns. So the cash conversion cycle, really, when you're in a crisis, there's probably three strategies companies can turn to. I mean, the first is to do a business pivot, in the form of a new product to try and grab some growth. The second process is, strategy is to focus on your business processes. So what can you do to remap processes, rejig your business to gain efficiencies? And the third is to probably reduce costs. So this whole presentation is about the second strategy, which is business processes. What efficiencies can we bring into the business to improve it? Now, a lot of cash is tied up in a client's cash conversion cycle. As you know, you might be importing stuff out of China, it's getting put on the ship, it's landing in the docks, customs are pouring over it, it gets into your business, and then you're on selling that to a client. That whole cash cycle is your internally generated cash locked up for a period of time. We're not going to focus too much on this slide. We're just going to go down the left-hand side here to show you really what debtor days outstanding, inventory days outstanding, creditor days, and what the cash conversion cycle is. Really, rather than go through these definitions, if you're in doubt, just go to Google. Just type in debtor days, inventory days. It'll show you how to calculate it, and we'll probably circulate this pack after the presentation. We're going to go through an example now to show you. This is a study done by PwC, which benchmarks the cash flow conversion cycle of large corporations right down to small businesses. And you can see here large corporations are converting, the ordering of the inventory, conversions into products, and selling it and collecting it from their clients every 37 days. So their cash flow is getting this kick on average every 37 days. If we go to the other extreme, small businesses are waiting 84 days. And that's a long time to be starved of capital. And the reasons for this are, your large corporations have a lot more pressure that they can exert on their larger clients to pay them. They've got probably better systems and processes, and they might have more personnel in their business to go and chase these payments. Now, the whole aim of this presentation is how can you get this 84 days down to a lower number so you're collecting your cash faster. And the Small Business Ombudsman, Kate Carnell, actually has this small business sector in her site. She wants to get it legislated that the smaller clients are getting paid a lot faster. So we're going to go through an example. This is Acme Roadrunner Proprietary Limited, and it's a business that essentially provides landscaping services to councils across Victoria and New South Wales. So you can imagine they've got workers on site, with their tools, and they're cutting hedges, they're cutting trees. They've got a couple of vehicles. So the first thing we do is, obviously, you in your own business have your revenue statements and balance sheets. I mean, I don't know about you, but there's a hell of a lot of numbers on here. It can get pretty confusing. Sometimes you need to sit down with your accountant and go, what does all this mean? But we're just going to pull some very simple numbers out to help you calculate your cash flow conversion cycle. So the first thing we want to probably just look at is, as a business, you might be interested in calculating your sustainable EBITDA. So that's the amount of cash flow that you're generating as a business on a sustainable basis to serve your operating expenses and provide money for capital replacement. So what we do is we go into the net profit before tax, which is 117,000 as pointed there, and we add back the interest expense that you've paid for borrowings, add back depreciation, a little bit on amortization, and we all add that up, and this business is producing a sustainable EBITDA of, roughly 250,000 per annum off revenue of 1.172 mil. When we go to the balance sheet, we're going to calculate those ratios really quickly. Debtor days, you can see there that all we're doing is we're going in and grabbing the accounts receivable, dividing it by the revenue that you saw on the previous page times 365. And we're doing that for both years. So year on year, you can see that the company has improved its debtor days, which is fantastic. They're getting their cash faster. Inventory days, this client doesn't have inventory sitting on the floor. This has basically got workers and trucks driving around servicing clients. It's a service business. And the creditor days, we're just grabbing the accounts payable and dividing it by the cost of sales, which is on that previous revenue statement, and multiplying by 365. And again, you can see the year-on-year comparison. So to calculate the cash conversion cycle, all we're doing is getting the debtor days plus the inventory days, which is 0, and subtracting the creditor days. And so this business is actually generating cash faster than it's actually paying its clients. Now, it could be a signal that it's struggling to pay its clients, but it could also be a signal that they've agreed on favourable creditor terms. And this is really favourable for this business. It's collecting its cash. Now, not all companies are like this. Most companies are probably the other way, not negative 74 days. They're positive 84 days, and that's not a great thing. The reason why this is really important is that with the onset of COVID-19 and its impact to our lifestyles and business, it's really important that we focus on debtor collection in the period to March 2021. The greatest contributor to bankruptcy of small businesses in Australia going forward over this period will be debtor collection. And you can see here that there's been an adverse movement in debtor collection across nearly every industry. So people are struggling to pay, and they're using their creditors as a cheap form of finance. That's probably no surprise to a lot of people on the line. And you can sort of see the most impacted industries down below, where we've really had a deterioration, like pick out information media, telecommunications. It's gone from 5 to 44 days. The business has to fund that somehow. Now, there's lots of different ways. I suppose you could improve data collection. I mean, you could hire someone and say, look, I just want you to get on the phones, start ringing people. You can send letters, you can send emails. The purpose of this call was really to introduce you to, one of our partners. It's not for the purpose of selling you anything. It's just probably to give you information so you can make your own decisions. We're really lucky to have AJ on the phone from Easy Collect, who's designed a technology solution to help businesses improve their cash conversion cycle. And on that note, AJ, I'll hand over to you.
All right, thank you very much, Andrew, and thanks, Guy. That photo shows a lot more hair than I have today. This is my self-imposed haircut, working from home these days. So there you have it. All right, so I'm going to keep this fairly short to about 10-15 minutes and really focus on the topic that we spoke about, was how do we maximize the cash conversion side. How do we reduce your debtor days so you have more cash in your bank? So I'm going to share my screen here. Let me just make sure I'm looking at the right screen here. Give me a minute. There we go. Screen 2. All right. So what I have up here is the Easy Collect product. So we talked about, Guy mentioned talking about technology and how we can use technology to reduce debtor days. I want to talk to you about that in a very practical way that as an SME you can use in your business. Now, when we talk about getting paid faster as a business, Easy Collect, our purpose is to eliminate late payment. We saw in Andrew's presentation, it's gone up over the last year. How do we ensure that every business can be more successful, can run as a better business, right, and not have the headache of cash flow? So when you look at how do we reduce debtor days, there's no silver bullet. It's about doing many small things beautifully and doing things in a smarter way, right? So if you look at the process, at least before I started Easy Collect, I ran a wholesale manufacturing business. It was a very transactional business, so I felt the pain of poor cash flow. And it all starts, if you think of First Circle, it all starts when you first get your prospect or a new customer that you actually want to work with. How do you assess that risk? How do you manage getting them on board, especially during this time? There's a lot of businesses, especially in food and transportation, they're doing really well. They're adding new customers every day. They're growing and they're onboarding new clients. How do you assess the risk of those customers, right? And then once you get the right customers, how do you ensure you have the right systems in place to ensure they don't pay you late, they pay you on time? And how do you make it easy for them to pay you as well? So I wanted to cover those three things: risk, automation, and tools to make it easy. And we'll do that in about 10 minutes. And we want to keep this educational. We want to make sure that you are getting something that you can implement in your business today. So what I'm sharing here is a product that brings everything together. It's called Easy Collect. And what it does, it sits on top of your existing ERP or accounting package that you're using. So if you're an SME, you might be using NetSuite, SAP, Xero, MYOB. It sits on top and it grabs all the data because, as I think Andrew mentioned, you're all time poor and you don't have time to have a separate system. So all the data is in one place. And the first thing you want to do, so if we assume we're bringing a brand new customer on board, on the left-hand side here is we want to make it easy for you, hence the name Easy Collect, to onboard new customers. So the first thing that we can think about is, okay, we have a brand new customer. You today might have a credit application process where you send them a trade application, and that trade application could be a PDF that asks them for the director names and asks them for their trade references and how much credit they want. And typically, if you were like I was in my last business, you'd get back 3 trade references. They'd all be great, and if you had time to call all of them, typically you'd call 1 out of the 3 or 2 out of the 3 because you want to quickly open the account so you can sell more. They're typically always great. But it's not scientific. It's not based on data. So especially during these times, you've got to be more scientific. You want to base things on data. So what we've done is we've gone ahead and partnered with Illion, which is one of Australia's largest credit reporting bureaus, Australia and New Zealand. And it's also globally, the brand's called Dun & Bradstreet. So they're a third-party credit reporting bureau. A lot of our customers don't know what a credit reporting bureau is. And it's really, just to get on the same page, it is a company that looks after assessing and gathering data on the risk in the market of different businesses. And we've taken that data and we've brought it right into Easy Collect. So you can come in here when you're opening up a brand new account, say, for example, type in a customer name. In this case, I'll type in Easy Collect itself. And you can then get, within a few seconds, real-time scores and risk assessment of that customer. Now, why is this important? When you're opening up a new trade account, you want to be able to have the confidence that these guys will pay you on time. So late payment score, just to give you a sense of that, is the risk, as according to Illion, that this customer, in this case Easy Collect, will pay you on time or late. And they assess that by gathering data on thousands of different sources, how Easy Collect pays other suppliers in the market, and they assess a band. Say, for example, Easy Collect has an average risk or 12% probability that they'll pay you late in the next 12 months. And that's really important for you to have on hand so that you have the confidence to make better decisions. Same thing, failure risk. They look at data from like industry, the number of employees, the type of people they're selling to determine a failure risk. And this is all external data that's verified, and it takes away the emotional element of it, so you can make decisions based on fact. And if a business has a really high risk of failure, you might still want to work with them because you're thinking, hey, these guys are great customers. I just really want to work. But why is it such a high risk of failure, or why is it a high risk of late payment? You can then go and actually get a credit report if you want to. That's if you feel like you need a bit more information. That gives you information as to why the customer might be a higher risk. Who are the directors? Do they have any court actions or past court actions? You can look at the PPSR here as well and see, what is any other claims on the PPSR register? What is the trends over the last 12 months on late payment? And this is information that's really accessible to you as an SME, that most SMEs don't even know exist, or it's too hard, so they don't do it. So I think one of the things we want to talk about here when it comes to debtor days, really become scientific about it. Get this information's there for you to use. It's been traditionally a little bit inaccessible for like SMEs. More and more, working with Banjo, this is something which you should use so you run a better business. And this report's quite comprehensive. I won't go into too much detail, but it's a key point in running a better business. And then as you continue to work with customers, what we see is you onboard a customer and you forget about them. They go in the drawer. You've done your risk, 6 months ago, a year ago, 2 years ago, and they are what they are. But what you should be looking at doing is assessing the risk every month, and surfacing the ones that are problematic, because businesses change over time. Their businesses change too. So it's not set and forget. It's about having a process that every month you look at your risk. So again, this view here that I'm showing you is your debtor ledger, because it's connected to your accounting system, based on aging. But if I just view that based on risk, which is what we're talking about at the moment, you can look at the same information. So it dynamically every month looks at all your customers in your book, and it'll say, okay, these are your customers. What is the risk of the customers today as of, let's say, when August, in August, what's the risk of these customers? So these customers continue to be very low risk, meaning that they pay you on time and they're paying other suppliers in the market as determined by the late payment score or the failure risk score. So you have the confidence to know, what, I'll do more business with these guys. Let me extend credit. Let me do promotions with them. But as you go down, you can see the risk level goes up because businesses change. So people who are in watch and monitor, it's quite an interesting category. The explanation here is here at the bottom, but fundamentally, people in this group are paying you on time still. So because we know how late or early they're paying you. But the key point is they're paying other suppliers in the market late. So now you can start to say, maybe you're a key supplier, maybe you're a freight company, and they need to pay you on time, but they're paying other suppliers late. So you, as a credit controller, an owner, an AR manager, as a finance manager, can start to get more precise as to where you should spend your time when it comes to chasing and managing your customers, right? And then a really important part from there is taking actionable insights to manage that risk. Okay, so I've got this risk. I can see customers that are problematic. You can then, for example, look at, I have 150 customers who I have to prepare for like legal action. Let me go and actually view those customers and take some actionable next steps, right? Because what you really want to do is not just to have a report, is to do something about it. And that's the other way to reduce debtor days. I'm coming back to, I guess, the point of the webinar. How do we use technology to reduce your debtor days? So what you have here is like a report. Okay, it's a live report that shows your customers. It shows the business number. It shows what stage they are in their workflow. So one of the products that we have is an automated collection workflow. So if you're a business and you need to get paid on time, there's nothing better than consistent, persistent, polite follow-ups, especially if they're personalized. It works in today's environment. I'll come to that in a minute, but really that stage is something which you can see on this report. You can see the overdue days, the balance owing, and you can see the overdue. And then you can see the risk level of those customers. So one of my favorite things here is actually to look at your customer list, set up a couple of risk groups that are really important to you, like let's say people who are in legal action and maybe a potential relationship issue. You can apply that filter. And what you can then do here is say, you know what, show me all customers who actually owe me more than, say, $500, right? Apply that filter again. That'll bring it down to, let's say, 152 customers. Select them all in one go, and then maybe send them a bulk SMS or a bulk email. And what's really nice about this is by you doing this, you can really personalize and customize those messages to your customer in seconds. So you can say, hey, this is your final warning before we go legal. And what you'll notice is this phone is from the 1980s, by the way. I don't know why. We should probably update that UI. But what you'll notice is the content that gets sent is all dynamic. It's all updated real time based on what you have in your ERP or accounting system. So you can be smarter, more efficient on how you communicate with your customers. And these are just like kind of one-off actions, right? But really, as a business, you might want to say, look, this particular customer, let's go into, say, Burge, Daniel, and Lachlan. I want to get more like information on them. So you can then drill into that customer. So, this is a complete CRM for your debtors, and it works in sync with your accounting system. So I can come here, I can see, look, this is what's already happened. This is the automated workflow that's been set up for this customer. I can see the history. I can see that they've actually opened a couple of things that I've sent to them as well. So you actually, like a big brother here, you're tracking them. You can see their open invoices, their contact information, and their risk level. So, you can have at your fingertips a view on your data, and information today is power, right? So I can, for example, say, before I actually complete this phone call, because, in this step, it's an actual phone call, I want to maybe send them a quick email before I call them. I can click on email, and again, using the data in your accounting system, this is a one-time template you can set up. It'll merge all the data, and it'll send a very personalized email to your customer about whatever you want, right? This is really about, again, getting smart with your time. So instead of having to, write up a table in your email system with the invoice number and date for invoice, all that's dynamically generated, and it's there for your customer. And a really important thing that we're seeing during the last 5 months is more and more people are working from home, as you can see where I am and where I guess Guy is. And because they're working from home, they are paying in different ways. So you've got to make it easy for your customers. Even if they're big businesses or small businesses, there's still people who are paying, and they are looking at different ways of paying. And what we've seen is about 26% of our customers are now paying after 5 p.m. and they're paying by credit card. Right, so if you don't accept credit card today in your business, think about it as a way to reduce your debtor days and improve your cash conversion cycle, because people like to pay online. So what we've done here is through our payments product, you can add a Pay Now button into your reminders, or even into your invoice directly into your ERP. And when you click the Pay Now button, it will give your customers a way to view their invoices in real time for what they owe you. So again, think about this. You're taking away the friction for them to pay you. Less friction means they pay you before paying the next supplier, right? It's really about making it easy to get paid. On the business to consumer world, this is much better than B2B. A lot of B2C companies have credit card, as standard. If you look at B2B, it's not there. And people have their excuse of people don't like to pay by credit card. They'll do EFT, they'll do check. And that's all correct too. But give them the option. Let them pay if that helps them. And so what they have here is a view to view. They can view their invoices. They can actually go ahead and say, I want to part pay an invoice for $1,000. They can pay, and what they can do is they can actually check out themselves, put their own credit card details in. And if you're asking a question here, I don't want to pay credit card fees, you can automatically surcharge those fees as well to your customer. So you don't have to actually absorb those fees. So there's really no reason to say you shouldn't accept credit cards, because credit cards are too expensive. It's not the case. Surcharge automatically, and you know what's even better? Anything that people pay here will automatically be written back into your accounting system. So it's less time spent allocating payments as well, right? And this is something which I would just say to you, really think about how you can get smarter with the way you offer, options to your customers to actually pay you. The other big thing, just going to the next 5 or so minutes, Guy, I want to touch on here is, we spoke about assessing credit risk. We spoke about how that's really important when it comes to making better decisions. We spoke briefly about payments and how to reduce that friction. But a really core part of everything is communicating with your customers in a really human and empathetic way, especially now more than ever, right? So automation has its place, but it's automation with that human touch that's really important today. So what you can see here is an example of how because we connected to your accounting system, we know due dates, we know your customer terms, we know the information we need to know to set up a really smart automation workflow that allows you to do things like emails and SMSs, and you can set up when to send it. You can put the content of what actually goes in there. It all comes from your own email address, and the excuse of I didn't get a copy of the invoice has now gone away because every customer has their own portal where they can view their invoices. But what you'll notice here, there's a couple of steps: email, SMS, it could be whatever you want for the first two steps. And what you find is about 30 to 40% of customers, your low-hanging fruit, will pay on those first two gentle nudges, okay? Because that's just your good customers, your business as usual customers. But what you find is a lot of customers, 60%, need a call. And where a lot of automation falls over is they just do email, SMS, email, and you don't have a call. And I have to just say to you, you need to call your customers. The data shows us calling works, and calling is something that you need to do to ensure that you really improve the cash conversion cycle. And you can have more than one call. Maybe have a call on the third step and maybe again on the sixth step, right? And if someone does pay, by the way, they'll send a thank you message if you wanted to. It'll stop chasing, and that's time saved, work done. But when a call is due, the way the system is set up is it actually sends you a list. So if you're an accounts receivables person, you'll have a list of your calls that you have to make in that day. It'll be sent to you like a daily task list, right? And so if you go into your Easy Collect task list, which is like your calls to be made section, you can actually see the calls that you have to make in that day. So imagine you as a finance manager or an accounts person, you are very focused on what is a task for the day. So like, you know, a lot of salespeople use CRMs. Think of this as a CRM for your accounts team, right? You come in here, you can see the calls, you can see what stage it's at, you can see the days overdue, what's owing, and, you know, really important, what's the risk level of that customer? Now, the risk level by no means should be a way for you to stop working with that customer. It should be a way for you to understand that this customer might be going through a tough time. Maybe they're a cafe type business, or, you know, and they're struggling and they can't pay their suppliers. Because of that, the risk has gone up, right? Because the risk is updated every month. And does that mean you should chastise them? No, it's about understanding who the customer is, know the risk, maybe stop selling to them so you can stop the bleed on your end, but maybe, you know, work with them on a payment plan. So maybe, you know, you can, when you call Clark and Conroy, you can have the superpowers, because now more than ever, information is power, right? And when I complete the call, perhaps it can be something like this. You know, I've made the call today, and you've spoken to, say, Bill, and you've got into a payment arrangement because you know that they're really having a tough time, right? And you say, I'll give you, say, 2 weeks, and I'll call again. Right, so these are your notes. Everyone can see this within your company. So when you save those notes will be saved in your history. Again, this is really important. And then what this does, it'll then prompt you to set up a payment plan with the customer. So now that you've said that on the customer will say, okay, let's set up a payment plan. So if I click preview, this is an example of a template. You can look at, thank you. We can, you know, let's set up you can pay by EFT, but if you can't, how about you pay in 10 weekly installments, for example, right? So there's things that you can do to really help your customers during these times to have the tools so that you can empathize with them. And of course, in some cases, people are just not going to pay, and you just have to accept that. And you have to then maybe think, do I go to a third-party legal? Do I go to a third-party debt collector? So really closing that loop, and this is the final point I want to make, is super, super important. You want to have a way to say to the customer, look, you know what? They haven't paid me. I've tried multiple steps. Doing nothing isn't an option. I think Andrew mentioned it's one of the biggest causes for failure. It's not the fact that businesses have overdues, it's the fact they don't do anything, which is the next step. They're too scared to go to a lawyer or a debt collector because they're scared of ruining the relationship, or it's too hard. How do I go to a lawyer? It's too expensive. Forget it. I'll just write off $500. You know, but that adds up. So what you can do here is you can click a button and say, send a demand letter, and it goes to a third-party lawyer. That third-party lawyer could be your own. It could be the one that we can recommend. It doesn't matter, but it's a point that you should do it, right? And when you do it, you'll get action. Same thing for debt collection. You can go to the next step, and the debt collection step is really a third-party debt collector. Use your own, use ours, but the point is do something. Otherwise, it's going to result in you writing off a bad debt, and I had that pain in my business, and it's why we built it this way. So really, I guess to summarize, if you are doing all these things correctly, and this is my last point on the cash conversion cycle, just to loop up what we were talking to, what Andrew showed in his example, is there are lots of things that affect the cash conversion cycle. You know, the inventory, the debtors balance, your payables. In that example of Acme, you know, it was amazing. You know, they were getting paid quicker and paying their suppliers later. But really, you know, in a business that's, for example, doing a $2 million turnover every quarter, so maybe an $8 million revenue business, 73 days is what it takes to get paid in this example. If you can reduce that, right? So if you look at 73 days, it's the actual debtors days. And mind you, there's a lot of things you can do, not just debtors. You can do stuff on payables and everything to improve your cash conversion cycle. But on debtors, which is what I'm talking about today and what we're talking about here, is that if you can reduce 73 days by even say 10 days, which is what, you know, we have kind of it's our own internal guarantee. We know 10 days of what you can reduce using technology. What does that mean to your cash flow? So if I go from 73 down to say even 10 days, which is 63 days, what you see here is as a net cash position, you have an extra $200,000 extra working capital in that one quarter in your bank faster. This is, you know, on top of all the savings you have on, you know, efficiencies and people and bad debts and everything else. This is just purely working capital that allows you to buy that extra truck, you know, but I was going to say go on holiday, but not going on holiday, but, you know, do more with that money so you can do other things in your business. And it's a really big impact by getting on top of this. Whether you use EasyCollect, whether you use Banjo, whether you use something else, I think focusing on debtor days and improving that cash conversion cycle is a really important, I guess, next step for you to think about. So I'll just pause my screen share here and perhaps maybe hand over back to you, Guy, if there's any questions or any comments.
Sounds good. Sounds good. Let me just show my screen while I'm doing this. So I'm just going to flick through a couple of questions here as we're going through. But first of all, thank you, AJ. Really good prezzo. Thanks, Andrew, for the time. I've had a couple of questions come through, so I'm just going to go through a couple. I found it really powerful, the superpowers of the technology that you mentioned, AJ, and the ability for a business. We're a small to medium enterprise too, right? So to get that extra working capital in your business just by using technology and focusing on your debtor days is really strong. I'm going to start with Andrew because it's been a while since you've spoken. Can you tell us how Banjo, because we are using it, how Banjo's been using the EasyCollect software and what are the benefits been for us?
You look at, as a business, I think that we're always trying to develop non-traditional credit insights that help us understand our clients better. And there's certainly some data here where we can sort of see how people are focusing on their debtor days, but also how their clients are paying them. And then that helps us develop sort of like the non-traditional credit techniques to help us develop better relationships with our clients and understand what they're doing. And there's probably an overall macro view of how industries are performing, what the trends are across those industries, you know, especially during a crisis like now.
Yeah, cool. All right. Thanks, Andrew. Look, I'm not going to, I'm just interested in time, so I won't go too much on us, but more sort of for you, AJ. You talked on accounting systems there earlier. Are there any accounting systems you don't connect to? How easy is it to connect to accounting systems for you guys? Because there's a variety of systems that people use out in the market. Oh, you're on mute.
I'll go off mute. Yeah, sorry. Thank you. Yeah, so I'd say we cover about 60% of most accounting systems today with the ones that we have out of the box. If someone has a system that's very unique or is industry specific, we also have a way to connect via what we call like a CSV, like a flat file custom integration, which we can do. So we've got both options, but out of the box, you know, you got all the like majors covered. It's really some of the more industry specific ones that we would need to do a custom job, and it's not super difficult. It's just, it's not out of the box.
Yeah, okay. All right, great. And then how long will it take? Like, everyone's busy at the moment. Everyone's flat out and trying to, I think with the duck analogy of everything looks calm on top of the water, but we're paddling like mad underneath the water. So how long does it take to set up? Particularly, you looked at, there's some really great workflows involved with your system. So if we came in, how long does it take typically to set up a new business?
So I would say, you're a good example too, as Banjo, you guys use a product, but most of our customers who are, your SMEs, the biggest constraint to getting set up quickly is the allocation of time to look at the actual data in your accounting system. Do you have email addresses for your people? Do you have the right data in your system so that when the system does turn on and you look at, business names and, follow-up emails and you're making calls, do you have the right information? So, that's the biggest thing, and that could take a week or 2 weeks for someone just to go through and check. And it's I think even if you don't use EasyCollect, it's really important to have that in your accounting system. So as a good plus point, they get their data in order. So typically between 2 to 4 weeks is where a business is up and running with the product. If the data is in top shape, you'd be up and running within 2 or 3 days.
Okay. Yeah, great. Geez, that's pretty good. All right, and the credit insights. How do you manage and get those credit insights again? How do you calculate the credit scores for the different businesses?
So the credit scores are, as you mentioned, maybe Guy, you can add your point here as well, because you work with, I think, Illion too. So we have a partnership with Illion, which is a external credit reporting bureau. So a credit reporting bureau is a company that their main task is to assess risk. And what we've done is we said, look, let's get the risk information into the hands of SMEs in a really simple way. So what we've done is we've partnered with them. We get the scores on your customers, and the way we get it is by matching your customers' name and ABN to their database and provide you risk scores real time in the app. So it's really about making it easy to access that information. And of course, there's a cost to it, but that's just, we can discuss that later on if anyone wants to look at that. But it's coming from Illion to you, so you can make those decisions.
Okay. And look, probably final question really, which is probably going to be important to people on the line as well. You touched on it then, cost. How sort of on average, how much does it cost, and then does EasyCollect have a trial period for people to understand?
Yep. So the trial period is 1 month for anyone who wants to use the product. So in that 1 month, they can use the credit scoring and the insights, everything for free for the first month, as well as the workflows and the payments. It's really because we want you to believe it can help your business. And after that, it's basically priced on the size of your ledger. So the more debtors you have, the more it costs, right? Because there's more data that we have to gather, there's more support required, and there's more load on the system. So really the way we look at it is as an average business has about 500 debtors, you're paying about $350 to $500 a month for the product. When you look at the cash conversion cycle and what you're actually saving, hopefully the math makes sense for you to see an ROI there in the next couple of days. But again, everyone's in their own personal circumstances, and EasyCollect may or may not be the right solution for you. It's really about just making sure you do those high-level steps that we mentioned. Look at payments, look at workflows, look at data to make the right decisions. And we are one of a few options.
Okay, cool. All right. Hey, look, in the interest of time, I'm just going to finish up here. Hopefully everyone can see that screen here. We're getting close to 1:45, which is the time we said we would do the presentation too. But I want to thank, first of all, AJ for coming along. As everybody's getting to see our personal bedrooms and offices and stuff like that. So thank you very much for presenting, AJ. Thank you very much, Andrew Colliver, for presenting as well. I'm sure all the clients on the line know Andrew. Well, I imagine, good number would. If you have any queries around the EasyCollect system, in the first instance, we'll get you to contact one of our BDMs here at Banjo, and then we can, Jason can direct you to the right person at EasyCollect to have a chat around it. Jason's details are there on the screen at the moment. but we will also send out a copy of this presentation and the recording of the webinar. So look, on behalf of everybody on the line, I want to thank everyone for attending. As I mentioned, people are getting a little bit webinar wary. We just felt this was a good one because it just shows some benefits that people can use technology in this current environment to help them get through to the other side. Okay.
Thanks, guys.
Thanks, everyone.
Thank you. Okay, bye.
All right. All the best.